the deficits will reach new records over the next few years. This is not going away.
They now have to keep printing or we crash.
We've got this ticking time bomb.
Talking gold with the one and only Andrew Maguire.
Welcome to Live from the Vault.
Hi there, my name is Shane Moran, and I'll be your host for this week's episode of Live from the Vault, and welcome to the show that goes beyond the headlines and uncovers the truth about the precious metals industry and the effects on the global economy in these historic times. We have exclusive access to experts and insiders, and we reveal information and insights that you simply won't find anywhere else. Now, this week, we have the one and only Andrew Maguire, precious metals expert and whistleblower in the vault. And to help him pull back the curtain, we'll be joined by a returning guest and by popular demand by you, our Live from the Vault community. Mr. Peter Krauth, author of The Great Silver Bull, is in the vault. That's right. Peter Krauth is in the vault, and you're not going to want to miss a word of this conversation here about silver. So just before we introduce our featured guest and head over to the UK, please help keep spreading the word about this channel by hitting that like button. It really helps the channel. Share this information so more people can find out about it. And if you have already subscribed, if you haven't subscribed, subscribe. But if you've already subscribed, just click on that bell right there and we'll notify you as each episode goes live. And with that, for those who have not met Mr. Peter Krauth, he's been investing and writing about silver for more than 20 years. And as a precious metals expert and former portfolio advisor, Peter is a frequent contributor to financial websites such as Kitco, Forbes, Seeking Alpha, BNN, Bloomberg, and the Financial Post, just to name a few. He's the author of the best-selling book, The Great Silver Bull, and which it really details the silver's historical role as money and why it's critical in technology and how to build your silver investment portfolio dramatically outperform inflation. Yes, we're going to include links below so you can find out more about his work and about his book. And with that, let's head over to the UK and talking gold with the one and only Andrew Maguire and our featured guest, Mr. Peter Krauth. Over to you, Andy.
Well, thanks, Shane. Thanks for the handover. Thank you, Peter, for joining us. I tell you what, I really have been looking forward to this. And Shane, it is the biggest silver bull I've ever come across in all my life. I mean, my goodness me, there isn't anyone that loves silver more than perhaps him, you, and I. And so, thank you for coming in and talking some silver for us today.
It's a pleasure, Andrew. I certainly look forward to it. I remember our last talk and, we had touched on a lot of great points, and I'm looking forward to doing the same again today.
Fantastic. And obviously, people will know you for your book, The Great Silver Bull. Fantastic specialist book, really. And of course, it details, what was so interesting, and we covered some of this last time, is the silver's historical role as money, which I think so many people haven't looked at how that came about. And it's really important to understand these kind of things. And then, of course, how it's now critical in technology. And you also, on an ongoing basis, have a fantastic website where people can come in, parachute in, and understand, really get some guidance onto how to build maybe their investment portfolios. Some people just really, it's been hit and miss. And suddenly we see silver breaking out. Hey, this is the perfect time for you, Peter.
It certainly is. It's very exciting. And, Andrew, I've seen, some of it's predictable. We've seen the larger cap companies, the larger silver producers, perhaps some of the larger royalty companies have been the ones to move. And that makes sense because institutional money is smart money. They move first. They're going to go to the larger caps. And even when you get some retail money, so individual investors that start to come in, if they're less familiar, let's say, with precious metals, but they see the sector start to move, they will go for the lowest risk first. So we have certainly seen that portion of the silver investment equities spectrum start to move. That has moved first. We're starting to see the sort of mid-tier producers, the developing companies, and the explorers as well start to move. And I can tell you, there are always some exceptions, and some explorers, I can, without naming names necessarily, but one that I recommended maybe about, I'd say about a month and a half ago, has already moved about 70%. It only took a few weeks for it to take off. In that time frame, another one has actually moved about 50% in just about a week and a half. And these are the juniors, of course, much higher risk, but it gives you some idea of when money starts to move into this sector. It's quite a small sector. People, don't realize how, if you look at the silver mining space, it's really very small. And in the last, I'd say 3 weeks, and I can speak to that a little bit if you want, perhaps later, but there were 2 very big deals that were made. And I've been talking about M&A being very likely in this sector for over a year and a half, just based on where things were going. And we've seen that start to happen now. It was just incredible how within a span of about 2 or 3 weeks, 2 major deals were announced. So that's really exciting, but also impressive to see. And it's making the acquirers, I believe, healthier, cash-wise, production-wise, and so on. So really some big moves happening and starting to unfold kind of the way I've been expecting it to happen.
We're going to circle back on that one, Peter, for sure. And I think that kind of, when we just draw back for a minute, because I think one of the things that I was, and I'm going to talk about your recent presentation, but basically, I think what surprises a lot of people, and perhaps because they just haven't looked or understand, when you've presented, you look back over, sometimes we all get mesmerized by a 10-minute chart, a 1-hour chart, a daily chart, but you've looked back 5 years, and you looked at in your presentation, you looked at the relative performance of the juniors. And I think it's going to surprise a lot of people. And I think you even had a chart that would, that kind of illustrated that.
Yes, exactly. So the juniors, if what's interesting is you look at what happened in 2016, for example, there was an absolute spurt in the gold and silver prices. We saw silver take off. I think it was something like 40% that year from late January or so until maybe July or August. And if memory serves me right, silver was up about 40%, which is quite impressive. But you had the silver juniors absolutely explode higher. And that's in the silver. And that's really actually using this SILJ ETF, which is traded in the US. And some may argue, I think fairly, that it's not a true silver juniors ETF because, again, market caps are small in this space. And when you build an ETF, you can't easily go into these sort of more thinly traded companies. So they build their index in a way that allows them to, invest in these companies. But it's also a little bit misleading because many of them are silver or gold producers that have interesting or significant amounts of silver. And then, as I say, it's called silver juniors, but really they're pretty sizable market caps. Nonetheless, that ETF absolutely took off when silver did in the first half of 2016. And if memory serves me right, that ETF of so-called silver juniors was up about 8 times what silver was in the span of about 6 months. So it was just absolutely phenomenal. I think that if you look at how that ratio chart has been evolving, it's bottomed in the last sort of year or so, and I could see a similar move start to happen. And it really, the kind of move we've had in silver itself, where silver bottomed at around $22 in February, we're currently close to $35. Silver has easily outpaced gold this year in a big way. And there's no reason why we're not going to see the equities really start to gear up, so to speak, and really start to catch up and could perform really quite dramatically.
I think it's an unloved area because so many people have been gaslighted into thinking, You know what? In fact, I think I just looked at sort of an episode. We just did an episode which basically looked at how essentially this sort of gaslighted range has, for the last 10, 12 years, seen silver just not perform on, for those people that have bought silver in the past and in the higher levels, and back to suddenly we've got this breakout now, this current breakout where we see a lot of, in our view, a lot of these guys betting against silver in this gaslighted range, 10, 12-year range, just got wheeled out feet first. I mean, these are options traders who have been selling calls. And I'm sure that the market makers have been using these useful fools to just really just make a ton of money out of these guys as they continue to sell calls into a range, often a year ahead, like from a December contract over to a next December contract. And suddenly, bang, it blew them out. And in fact, we just captured, and I put up a chart just on an episode which we're just releasing, where on the 18th of October, there was, I think, 29 still undelivered October contracts, silver October contracts, were charged over $2 an ounce to get out of that liability. And we've captured it on the chart. We've got it. We've nailed them. And they were wheeled out feet first. These guys are gone. I think their ranges are blown.
That makes sense. And I'll be honest, I'm not well versed in the whole futures markets. I understand them in a basic sense and what they do and their influence. But for me, when I look at, for example, what you were saying is that, silver has been trading in this range, and we've been hearing from the Silver Institute and others who do research about the limited supply and then the growing and excess demand. And so I think it's good to give viewers some very simple, straightforward context. Silver is about 1 billion ounce a year market. In other words, supply. So you have about 85% of that comes from mining and roughly 15% comes from recycling. However, demand is a $1.2 billion market. So there's a shortfall of 200 million ounces a year. This is 20%. And this is consistently for the last, I'm going to say 4 years, if you include the forecast for this year, which will likely be surpassed in any case. But if you include this year, we're at something like 740 million ounces of deficit, cumulative deficits for the last 4 years. That's 3/4 of a full year's mine and recycling supply just in the last 4 years. So, if I look back to around January, February of this year, I was thinking, I had subscribers asking me, if there's these ongoing deficits, why is silver not pushing above sort of this ceiling of about $32 roughly? And so I said, you're right. I need to look and figure out what is likely weighing on the silver price if there's just this excess demand. So I started researching, and I found the charts for inventories on the large secondary above ground supplies. And really, other than what is owned privately, private hoards, individuals, whether it's a few ounces or millions of ounces, these exist. But but these are not, documented. Other than that, what is documented is the LBMA's inventories, the Shanghai, the COMEX. And these are a few billion ounces. And what I saw when I started looking early this year was that as of early 2021, these sizable inventories had started to be drawn down in a significant way. And that has continued, actually. When I've gone back recently and looked, these drawdowns have continued. I mean, I'm talking to the extent of anywhere from 40 to 70% from those peaks that they reached in early 2021. So the conclusion was for me quite straightforward, that you had especially large consumers that, you know, the investment demand can sway quite a bit. You've got years when it's quite strong and it can dial back considerably. It's actually quite interesting because it's quite unpredictable, frankly. But the industrial demand is very steady and has been growing tremendously as well. And we can talk about those numbers also. But I felt that the influence on these secondary supplies that you find at these futures exchanges was likely industrial demand that was coming in and just chipping away, you know, draining these inventories. And these inventories are finite, you know. And interestingly, there was a report. So when I came to that conclusion that this was where they were getting their silver, did not have to pressure mining to produce more silver because you had these above ground stockpiles that they could simply draw down, do so at, let's say, spot prices, and not throw the market off balance, despite demand being in excess of supply. So they have been doing this for 4 years, 3.5 years. I feel they have perhaps a year to 6 to 18 months left of being able to do this. And funny enough, after I reached that conclusion and said so publicly in March of this year, someone sent me a report I would say about a month later, from TD, which had basically reached, interestingly enough, the same conclusion, which was that this is where the industrial users were getting their supply, not pressing on mining to produce more, but that this was finite. There was simply 12, in their case, they thought 12 to 24 months perhaps before this was going to be game over. And then, you know, we were looking at a squeeze. And I think the move that we've seen since then is the market coming to terms with that and realizing that, okay, this $32 is really not realistic. This range of say 20 or 22 to 32 is not realistic. Silver really needs to be much higher. Miners were not making real money at $22. They're making some decent money at 30-ish, but I believe 32 is going to start to become the new floor. And I'd like to give you an interesting quote that I came across a couple of months back, and I have put in my most recent presentations. And there's a firm out of New York called Gehring and Rosenzweig, and one of them, Leigh Gehring, used to run one of the largest commodities funds in the world. And so he knows what he's talking about, very successful. And his quote is about uranium. But it struck me that it applies almost word for word to silver. So here's what he says. 5 years ago, we became uranium bulls. So this was about, he's saying this, maybe I'm thinking 6 months to a year ago. He says, 5 years ago, we became uranium bulls. The market had quietly slipped into a structural deficit with reactor demand outstripping mine supply. Fuel buyers used so-called secondary supplies to fill the gap. So I ask you, Andy, what does that sound like to you? Does that not sound like what we've just been talking about in silver? And what happened to uranium, you know, in the last couple of years? I mean, the parallels are just, you know, unavoidable to make. Uranium went from $22, $23 to $80 and has stayed in that range ever since. So it essentially tripled and has not looked back. And so, you know, we have almost a perfectly comparable setup in silver. And so I think this is what we can look forward to as we move forward in this market.
I think what you've just done is illustrate beautifully. So obviously it's interesting because when we look from our side, the wholesale market side, and what you're talking about here structurally, and the supply deficits, and when we think about it, we're talking about the smartest banks in the world: J.P. Morgan's, UBS, Goldman Sachs, all these guys. Now, and yet they are, and if you look at the OCC, the Office of the Comptroller report, you can see literally billions of over-the-counter bets, over-the-counter derivative bets, really surrounding gold and silver, and there's specifically silver included. Now, these are the brightest minds. These are the smartest actors on the planet Earth. Yet, and they know what you've just said. They know exactly what you've just uncovered. Is that, and so the question that suddenly brings into mind, and to me it proves it, is that clearly along the way they had made derivative bets against silver rising. So why would they not have simply kept this supply, knowing that the supply deficit is front and center, knowing that silver is going to rise? I think what's happening here, and it makes sense because it confirms what our liquidity providers are saying, is they're unwinding these derivative bets as fast as possible. It must hurt them to deliver this bullion, above ground bullion, when they know ultimately it's a hell of an investment to retain it at this price.
Oh, I agree. It must be very painful. There probably are, I'm going to imagine there are some heads rolling in the process as well, right? And so it's going to be very interesting to see how all of that plays out, because it's like holding a large inflated ball under the water. At some point you let it go and then it absolutely shoots out. And I think that's what what's in the future. We've had a few silver squeezes in the past. They take different forms, but I do believe that we're heading towards another one. And, even some conservative groups like the Silver Institute and Metals Focus that does their research for them have said recently, actually very recently, they feel that, so two interesting things. They said that these deficits will only continue to be met from secondary above ground supplies over the next few years. So mining will not react sufficiently to help meet any of this excess demand. And they also feel that the deficits will reach new records over the next few years. So this is not going away. Basically, what they're confirming to us is this is not going away. And there was some research from S&P Global Intelligence that looked at mine supply. And they basically, so again, a little bit of context for viewers. About only 25% of mined silver comes from what we call primary silver mines, a mine where the main product is silver. 75% of mined silver comes as a byproduct of mining other metals, copper, gold, lead, and zinc, mostly. And so S&P Global Intelligence has put out forecasts saying that silver from primary silver mines is going to peak in 2 years, in 2026. They see that supply falling. And if you look at the forecasts from the Silver Institute for mine supply, not only, has it been basically roughly 1 billion ounces for the last 10 years, they don't see it growing at all for the next several years, certainly not this year. They actually see it falling in 2024. So this just sounds crazy if you think about it. Demand is 20% above supply. Recycling is very unlikely to be able to react in a significant way. Anyways, it's only about 15% of supply. Mining is 85% of supply, and mining is not moving. It's actually falling slightly. So these deficits are here to stay, and there's really only one way, realistic way that I could see over the next few years that these deficits could really actually be met. And that would be from what we talked about earlier, these difficult or impossible to assess privately owned, hoards of silver. And so, however, my argument about that, and some people will say, well, at the right price, this will come to market. And I won't argue with that, but I will say that I don't know, and nobody knows, I think, at what price. So what price will it take for people to let go, sell some of this silver back into the market, given the kind of economic environment, inflationary environment that we are in, and having seen silver just currently in this 1 year gone from 22 to say 32 or 35. And if you look forward and at a point in time where, let's say 6 months, 12 months, even 18 months in the future, where these supplies would come from private stockpiles to the market, silver maybe, who knows, at $40, $45, $50. Is that enough? I'm not convinced that those prices are enough to really satiate this excess demand. And this excess demand is also not going away. You just have to look at what's going on with industrial demand. It's just going through the roof. I mean, I'll give you an example. Solar alone took about 80 million ounces of silver per year for the year 2020. 2021, it jumped to 89. And then it jumped to 119 million ounces in 2022. Last year, it was 194 million ounces. That was a 64% increase of solar demand for silver from 2022 to 2023. The forecast this year is for 232 million ounces. Wow. Industrial demand is growing like crazy. I like to compare these numbers against actual supply as opposed to total supply, which we know some of it comes from these above ground stockpiles because they are limited. So if you compare industrial, which includes solar, against actual supply, mined supply and recycling, which we talked about earlier, which is about 1 billion ounces a year. Industrial just a few years ago was 50%. This year, it's going to be 70% of demand will be industrial. So, and as I say, investment demand really does ebb and flow a lot, but it is very volatile and it can come back roaring. And I believe it will. And so what I think is really interesting is to consider that if industrial has now become 70% of the market, leaving 30% for different forms of investment demand. So let's say I include jewelry, silverware, and pure investment demand in coins and bars. So I include all three of those. Those are now just 30% of actual supply every year. What's going to happen when the investment demand comes absolutely roaring back? I mean, industrial demand is unlikely to back off. We can go into a recession and you can make arguments about, yes, it could sort of maybe even flatline a little bit. That would actually still surprise me. So much of industrial demand is mandated, especially through things like solar, which is just increasing, tremendously. So I honestly don't see industrial demand backing off much, if any at all. Best case scenario is it could flatline. We're still somewhere around 70% of supply going to industrial. That leaves less for investment demand. That means everyone is going to, kind of stampede over each other to get the silver that's remaining in that 30%. What's that going to do to price? And so I just kind of leave that as an open question. And I want to maybe kind of recap what I was saying about solar before. To summarize those numbers I gave, solar went from 8% of total supply in 2020 to 23% of total supply this year. That's a triple in 4 years of silver going from solar. The portion of silver supply going to solar has tripled in a matter of 8 years.
Peter, in your presentation, you drew attention to India. Can you
Yes.
cover that a bit? Because I think in March, something big happened.
Yes. So you're right. There was the announcement of a huge solar park actually in India. Sorry, a huge renewable energy park. The majority of which is going to be solar. So this renewal, the rest is mainly wind power. But this park is going to be 5 times the size of Paris. And interestingly enough, we saw silver imports to India spike in February. I mean, absolutely spike. February alone was 64% of 2022's Indian silver imports. So 1 month.
Wow.
So, and if you look at Q3 in India in terms of imports, they were over 500% year over year growth over Q3 in 2023. This year's Q3 was 5 times what it was Q3 of last year. So imports of silver to India have been just off the charts. They cut back their import duties back in July. And we saw, I believe it was a strong mix of both jewelry and investment demand as well as industrial. But, the International Energy Agency has said that India over the next 30 years is going to see more energy demand than any country on the planet. And right now, they're a tiny player in terms of solar production, so manufacturing of solar panels. But the forecast growth is very strong for India in terms of producing solar equipment. And they're still only at about 5% globally, where China is about 80%. But that growth is on a very, very strong path going forward. So I think that India is absolutely a market to watch when it comes to silver. They've been all over silver for the past. They have a strong affinity to silver as they do to gold. But having seen gold at record highs, now they're starting to look for an alternative. The way people in Turkey, people in Egypt have been. And there are all sorts of reports of them moving towards silver because they've found that gold has become too expensive. And they're even in India looking at gold-plated silver jewelry because they like the look of the gold, but they know that it's still a precious metal underneath. And so they're turning to that as well. So, silver's a wonder metal. It's second only to oil for its number of most widely most uses as a commodity. It has over 10,000 different uses as a commodity. It's second only to oil in that way. So it's a wonder metal. It really is. It performs so many roles in industry, and there are patents that are being filed with uses of silver. I'm going to say almost on a weekly basis. It's just tremendous, and we're just starting to discover all the kinds of things that it can be used for. So it's got quite the bright future.
Peter, you've just put together a whole bunch of the pieces of a puzzle for us to put together. It makes sense, and I think you're talking about supply. You're talking about secondary supply being used up rapidly. You're looking at, and then you just painted the picture of really supply deficits, how that will grow. Now we're talking about Indian demand. You also mentioned at your great presentation, metals presentation, you also mentioned something which actually I hadn't thought a lot about: AI. Now that's that. Could you elaborate a bit about that?
Absolutely. So here are a couple of interesting points. A chat GPT query takes 10 times the energy of a Google search. So think about the new source of energy demand, with AI now becoming increasingly widespread and used in all sorts of applications, right? So and we also in part because of AI, in part because of just the way we're evolving as a society, we are generating more and more data. In fact, from 2010 to 2013, there was a 60 times increase in data storage. And the forecast growth from maybe 2020 or so to 2025 is a 50% growth. Next year, we're likely to see more than all the world data accumulated in 1 year that the world produced between 2010 and 2016 in just next year. So data generated globally is just growing at a sort of an exponential pace. And these data centers, and we've seen in just the last few weeks, we've seen Microsoft, Meta, which is former Facebook, we've seen Google as well, come out and say, we're turning to nuclear because we need power to supply our data centers and all of our operations. So nuclear is obviously reliable, but they're tapping in for the most part to facilities that either have capacity or have been dormant and that can be revived. So these are sort of, let's say, short paths to production, in a sense, to be able to tap into that power. They're not talking about trying to permit brand new nuclear facilities. They're talking about tapping into, as I say, readily accessible, short-term accessible power on the nuclear side. So I would say, first of all, they're not alone. There are multiples of these kinds of companies that are going to be demanding power. And the International Energy has said that solar is the cheapest form of energy now in history. So it's also, although it does take sizable areas, it is, however, also much quicker to set up, and it's much quicker to permit. So I would argue that solar is going to be what I think the majority of this demand from things like AI and from data centers is going to tap into. And I have a chart which looks at US clean power projects in Q3 of last year. And it shows a map of the US, and it shows the different types of renewable power sources. So wind, solar, and so on. And solar is yellow dots, and they far surpass everything else in terms of wind or hydro, whatever else you may have in terms of, as I say, clean energy. So we know that these kinds of projects are in the works. And as I said before, I think that after nuclear, which was sort of the fast, easy first step for these well-connected and well-capitalized companies to tap into, solar will be next.
And then this all competes with, we haven't even talked about electric vehicles. We haven't talked about, and interestingly, I think one of our colleagues at Kinesis, Robert Keynes, he drew my attention to the fact that Tesla clearly don't trust the ability to get all the silver they want when they need it. And so what they've done is they've gone directly to, in one instance, a Mexican mine, and literally buying it directly from the producer into the factory. Now, are you capturing any of that kind of stuff going on?
So that's interesting. I hadn't heard of that specific case. I'm going to have to dig into that. What I will say when it comes to, say, EVs, for example, is that some of your viewers may have heard that Samsung has a new solid state battery, and this could actually be a game changer. So like anything, these are going to be more expensive, and so they're expected to make their way into premium EVs to start with, but they are a game changer. And as we know, economies of scale will very likely over time allow these to become more affordable, and we'll find them much more ubiquitous. But the biggest, I think, hurdle, and that's certainly what I'm hearing anecdotally, is that for EVs is people just have range anxiety and they're not comfortable with 400 kilometers. And frankly, I don't blame them. But this new solid state battery from Samsung has an 800 kilometer range. It has only a 9-minute charge. Wow. It has a 20-year lifespan. And it's 50% smaller than the lithium ion battery. Now, this new solid state battery from Samsung has silver carbon layered anodes. And I've done all kinds of digging. I cannot get any kind of real numbers in terms of how much silver these batteries will require. But I've seen estimates that range widely, anywhere from perhaps 100 grams to a kilo of silver per vehicle. Now, that starts to get quite expensive and quite consuming in terms of silver for an EV. But even at 100 grams, that's a huge new market in terms of batteries for EVs. So we haven't even factored what that could mean to the silver market. And so it will be very interesting to see the kind of impact that will have as well. I believe that's coming. You know, the EVs have been mandated all across the board. There's some pushback because I think the manufacturers are realizing that the timelines that governments have given are not realistic. But this is a train that has left the station. It's not going back. It's just, it may slow down a little bit, but it's coming. And so I think these new solid state batteries will actually be a game changer as well.
That's incredible. Again, how few people will know about that. I didn't know about that until I looked at your presentation, which is on YouTube, by the way, guys. And I would draw your attention to it. I would really encourage people to get in there. There's so much information there. It blew my mind when I saw that. I had to listen twice because, I mean, that is, you know, we're talking about a game changer here. And also, one of the things I have a problem with when I see the guy in the pub and I say, oh yeah, very clean your Tesla, is it? Have you seen those lithium fields where there are acres and acres of sludge, where if a bird even lands on it, it dies instantly? I mean, goodness me. I mean, you know, so, and then your weight issues, the fact that your tires are creating huge weight. Your tires are creating an awful lot of residual smog into the air. And so really nothing's perfect. And suddenly what you're talking about here is the next leg forward. And it suddenly makes one realize, goodness me, none of this is factored in so basically whoever's pricing silver today, the more information, this is why I love information like yours, because the more information we have, to make our decisions, the easier it is for us to value those decisions and to act on those decisions. And goodness me, I mean, from everything we're talking about today so far, and it's amazing, is why are we even worried about buying silver at this price at under $50? I mean, goodness me, Peter. I mean, you know, we're talking about once this secondary supply, which I know is definitely related to derivative bets made in the past, once that, and that's, you've got India, you've got all these situations sucking this secondary supply as quick as they can, knowing that the price is going to be significantly higher in the future when it runs out. And it will ultimately, there'll come a point, as you say, what is the actual price where a producer will actually sell you a kilo or 1,000-ounce bar, a wholesale bar? What is the actual price he'll actually let you have that wholesale bar? And in the past, we've had to run through, silver's had to run through what we call the Loco London unallocated silver meat grinder. And and because they're, by running it through the unallocated situation there, you can play games, you can play derivative games. But now that the physical markets are increasingly bypassing London, the local London, as to say, meat grinder, and it's being settled in Asian-facing physical exchanges, where physical bars, where an order comes in, it's a physical price. This is so interesting because I can see silver, the price of silver, significantly higher.
Well, interesting point that you make. And back in March, when I, explained my I guess, thesis about why the silver price had felt capped, and that it was because the big consumers were able to tap into this secondary supply and not pressure for more new supply to come to market. One mining executive that produces only silver had said to me, he saw the presentation and he said, we sell about half of our production to China and the other half to the West. And he said, I can tell you that the Chinese buyers are all over us. They are prepared to pay a couple of US dollars over spot. They are prepared to pay us 2 weeks in advance to ensure that they get their supply of silver. And I believe a lot of that is related to the solar panel manufacturing in China. They cannot run dry of silver. It will shut down their production. And so that's crucial to them. And as I say, when I heard that, I thought, yes, absolutely. Great connection to what you were just saying. The Asian markets are the more true price for the metal these days. Absolutely. There's one chart that I had in there as well, which was put together by, it's a mix actually, TD Securities, and then you had the Incrementum Group, which does some great work, and some of your viewers may know their In Gold We Trust report every year. And so they have a section on silver. They put out charts quite regularly as well. And there was an interesting one which shows what they calculate as the years to free float depletion. So in any given year, if you look at the free float, so let's say that's what these secondary inventories are, and what demand growth looks like. So in other words, given current demand and growth in demand, how many years do we have left with this to be met by this secondary supply? Well, in 2019, before solar really took off the way it has in the last 5 years, the secondary supply was good for 163 years. Last year, it was good for 2 years. So it went from 163 to 2 years and a span of 5 years only. In a span of 4 years. So that answers the question as to what's been going on with these secondary supplies. They absolutely have been drained. And, I'd be curious to see a revision of this chart next year with ongoing growth in demand and ongoing drain in supplies. My guess is rather than 2 years supply, we may be looking at something like 6 months. It was just tremendous to see. So yeah, I mean, the writing's on the wall. I like to say, for me, the rarest commodity is patience. And if you do your homework, if you know the setup and you understand it, things can change, of course, in the meantime, and you need to watch and monitor and see these things happen. But if we go back to one of the first things that we talked about, which was that setup that Gehring saw in uranium 5 years ago, and my parallel to silver, I believe that that's what's playing out now. And as I say, we saw what happened to uranium. I think The problem is that there's a lack of patience on the part of investors. They're not willing to place their bets and then let the thesis play out. But silver has proven itself to be very rewarding in the past.
Yeah, and if you've been a silver stacker, if you're not one of these guys playing the movement of synthetic silver as it ebbs and flows through these ranges in the COMEX. I call it the casino because it really you can control 5,000 ounces of silver for a fraction of its actual cost. And then it's only when it comes to actually like today's first notice day for the November contract. Well, suddenly, I think there's about 600 contracts still standing there, all fractionally held. Well, suddenly someone has to pay the entire bill on that. So you tend to see the speculators run away. But so what's interesting is because we've got this tail wagging the dog. Historically, we've seen the tail wagging the dog. Now, gold, they've broken the gold market. I think we're just about to break the silver market because what's happening is while gold is a first-year asset class, it was reclassified by the Bank of International Settlements on the 1st of January 2023 as a first-year asset class. So all of a sudden, if you look at any big chart, you'll see that at that point there, gold has gone higher and higher and higher as the institutions, central banks can use now gold for the first time as a first-year asset class. It became deliverable in the FX markets, unlike silver, which is still not NSFR deliverable compliant. So in other words, if I buy an FX silver position, unlike gold, it's unallocated. They can play all the games with it. But what's happened is we know that through our liquidity providers that India, China, and Saudi and certain other entities simply go to because there's no point in loading it out into the as an EFB into the FX markets in local London because it's still unallocated. So they're literally loading this stuff out at the back of the COMEX vaults. Fact, absolute fact. So now you're talking about secondary supply. You're talking about these guys playing this game. We've seen the gold market broken, COMEX gold market broken in gold. I think we're going to see exactly because driven by what you're talking about. And from our perspective, what we see from our side, this is a game changer. It really, and I keep asking people, yes, great. If you're a stacker, you've been on the right side of everything because it didn't bother you if silver was going down, you kept buying it. But if you're a trader and you've been kicked out, you need to give your head an actual shake at this point.
Agreed. Absolutely. I mean, I was at a conference actually just last week in New York, and I met with someone who has brought several silver mining companies to market. Very, very successful resource investor. Actually manages funds for all sorts of sovereign wealth funds around the world, all in the resource space. And he has a tremendous affinity to silver. So I asked him, I said, where do you see this ultimately going? And he said, I see absolutely no problem for us to at some point attain a triple digit silver price. There wasn't the number put on it, but triple digits, we know what that means. We know where it starts. And so I think it's going to be a new paradigm. Think about it, Andy. If you asked someone, where would gold be? If you asked them this back in 1999 or 2000, when gold was $250 US,
Yes.
It's more than 10 times that now. And if you had told, some people believed it would get there, and they were laughed out of the room. And here we are, right? It took some patience, but that's a pretty decent payoff. And I believe it's still going to double from here. I think 5,000 is quite realistic. my true belief is that it's going beyond that, but on a bit more of a conservative basis. I think that 5,000 is a sure thing, and we're more than halfway. Triple digit silver for me is very much, I believe, attainable. And despite, and so some of the things that I learned at this conference is that people think there are no big silver discoveries. There are a few. They actually remain private, so they're not investable by the public for now. They're not listed. They're not public, but that will change. They will come to market. And even if they're a few 100 million ounces each, we're talking about a 1 billion ounce market every year, and the demand is more than 20% above supply. They will not have a material impact, even if they came to market tomorrow and started producing tomorrow, because even say 100 million ounce mine that has a 10-year mine life will average 10 million ounces a year. That's 1%. It's nothing. It's absolutely nothing. It's really nothing. So, but think about the upside in investments like that, given the kind of market. So there are some really exciting times really ahead for us. And I just encourage people to follow this space. You don't have to take or make outsized bets. Even the largest cap producers have shown some tremendous leverage. In the book, I talk about Pan American Silver, which is the world's largest public silver producer. They have, I believe it's over 1 billion ounces in reserves, but some of that is locked up in projects that need to gain social license and permitting, et cetera, et cetera. But that stock, I think it was between 2001 and 2008, was up something like 15 times. Wheaton Precious Metals, which is the world's largest, if my memory serves me right, the world's largest royalty company, with over 40% of that being in silver. So this is a tens of billions of dollar market cap company, was up 17 times between 2008 and 2011. So you can make these phenomenal returns from the lowest risk companies in the silver space. And then the juniors are just sort of exponentially higher from there, obviously with more risk, but the potential is just tremendous. It's a small space. When the money comes pouring into it, there are so few names, they all kind of rise with the tide and do extremely well. So it's a matter of having some exposure and being patient with it. It will come.
I think people who follow us here are very much into silver, but I would actually strongly recommend, if you're serious about silver, guys out there, should land on Peter's site. You have a subscription service. I firmly believe that stuff that's out there is free. Yes, it's all great, but you need to, when you pay for something, you take it seriously, you pay attention to it. And I honestly believe that people looking at your work, knowing your work, that people should come and check it out, find out what there is. But Peter, before, I will be shocked if we wrap up this episode without you circling back to what you talked about earlier. I think you talked about a couple of events that were worth taking note of.
So I think that if I'm on the same wavelength with you, Andy, what you're talking about is how we've got India. The demand there is growing tremendously. They are going to be the biggest consumer of energy. They are moving towards renewable as well. You need to look at the details of what's going on there. Secondary supplies have been drained dramatically. In some cases, 70%. We're looking at perhaps 12 to 18 months of that before that is completely drained. We have large research groups confirming this to us as well. And then the parallels with the uranium market, which, as I said, when I saw what this very successful group, Gehring and Rosenzweig, came up with, talking about uranium and how they saw that it had slipped into a structural deficit, demand was outstripping supply, and the buyers were tapping into secondary supplies, and that kept a cap on the uranium price until those supplies ran out. And then uranium went from 23 to, I think it's 83 today. So, these parallels are all there. The silver market is truly set up for a strong number of years going forward. And I'd like to maybe highlight one other thing. We've got central banks that have started to cut quite dramatically in the last sort of month or two. And we know that they do this in concert. So this is likely to continue globally. Well, I was curious what happened to silver when you get rate cutting cycles. Well, I can tell you that in the US, as the example I looked at, because it's the sort of, most important market. Well, if you look at, and so silver tends to bottom halfway through a rate cutting cycle. And now we're actually kind of, I'm going to say we're kind of going against that because silver has run up and the rate cutting cycle has just started. So maybe it's going to be a little bit different this time around. But if you look at the last 3 rate cutting cycles in the US, the silver price bottomed halfway through that cycle. And from that bottom until its peak, which usually took maybe a couple of years or so, it averaged a 332% gain. From the bottom to the top. So that's what we may be looking at this time around as well. I just think that that's something to leave listeners with. Central banks are starting to ease, and silver performs exceedingly well in this kind of environment.
And Peter, when people come to visit you on your subscription service, you obviously do a little bit of hand-holding to provide information for people to make their own decisions. It's information. In fact, that's what these sessions are really about. It's about getting information so we can make our own decisions, better informed decisions. And I think we all need to take responsibility for ourselves. And that, I believe that firmly. And that's part of our mantra here. Take responsibility for yourselves, but follow the best advice you can get. And I would strongly suggest, Peter, I know that you have incredible information. I know you're going to pop up a couple of charts here, but I would strongly expect that you'll get a lot of people wanting to come and really come and check out what you have got to offer. But I really thank you for joining us today. And you know what? I can't believe it's been an hour. And obviously after about an hour, we expect people to start tuning out, but I can't believe they will. But thank you so much for joining us. And we haven't covered half of what I want to talk about. So you please come back with us again, perhaps in the new year. We're not that far away, my goodness me. All the Christmas stuff's out in the shops, goodness me.
That's great.
So I wish everybody, a very festive silver experience until we catch up again, maybe in the new year. But I would really love it if you would.
Andrew, thank you so much. It is always a pleasure talking to you. And I hope you're right. I do, the approach I take is I feel educational. I'm obviously, I have a newsletter and I earn a living through that newsletter. And I obviously am happy to have new subscribers. But my approach is not to push to sell. My approach is that here's what I do. Here's the research that I do. I love doing it. And I act on it. I'm telling you what I'm that's what my newsletter is telling you what I invest in. It gives you the thesis for companies that I'm adding to the portfolio. And it explains to you why at some points in time, for varying reasons, I may remove a company if it's underperforming or I feel the outlook has changed. So that's really what you're getting. And you're getting a lot of proprietary research. Silver Stock Investor is the only silver-focused investment newsletter. I have not seen any others to date. So if you want to know what's going on in the silver space, I believe that's the place to go. So again, Andrew, thank you so much for giving me the opportunity. I always enjoy chatting with you and exchanging ideas and hearing about your in-depth knowledge of the silver industry as well. And it's been a lot of fun for me and educational as well.
Yeah, it helps to put all the little pieces together as they all come together. Thank you, Peter. Bless you, my friend, for all that you bring to us. And I really do encourage people to come and visit you.
All right. Thank you, Andrew Maguire and Peter Krauth, for another in-depth discussion. I knew you would like this one. And remember, buy physical, buy physical, buy physical. Make sure it's backed 1-to-1 and understand the difference between what Andy calls the casino paper gold and silver markets and the actual physical gold and silver markets. They're not the same. And so don't be fooled out there. And there you have it. That's all we have for you today on another amazing episode of Live from the Vault. And please help us spread the word about this channel by liking, sharing, and subscribing if you haven't already done so. Now, if you are subscribed, just click on that bell right there and we'll notify you as each episode goes live. And with that, we'll see you right here next time on Live from the Vault. We'll see you then.